Hi everyone, let's go over my medium time frame and low time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my medium time frame bearish scenario where we're looking for a move towards the downside in a wave Y, which is a three-wave structure to the downside, with the most common target of wave Y being between the 1 and the 1.236, taken with the trend-based sub-extension from the high to the low of W to the high of wave X, sitting between 26.1k and 25k. The 0.618 is a less common target, but nonetheless good to have on your chart at 28k. This also means that the X is already in, and then an expanding flat A, B, C structure where the target for C is the 1.618, which on this 12-hour chart has been very nicely respected indeed, and that this range over here is then the beginning of a move towards the downside. Because over here price took the high of wave X, it means that we're going to start in this scenario with a flat scenario, which then is a 3-3, and then you'd be looking for a 5-wave move to the downside in this particular scenario. Or if price is going to go a little bit higher, you'd be looking for an expanding flat ABC. So a flat is that going to be the first structure to the downside, then you're going to have a bit of a range before then continuation to the downside in again a 3-wave structure. Potential trading setup is the target area for wave Y, of course, depending on how price then goes towards the downside. If I look at the target areas that we have for potential support and also extra confluence for a potential setup, you can see that price over here already touched the yellow target box. It hit the weekly naked point of control, which was the strongest support in the yellow target box. And other than that, there's not too much going on over here besides some blue target boxes. Now for a wave Y most commonly is ending below the low of a W, which is sitting at 25.8k. So that's important to remember. So preferably price is going to go a bit deeper, maybe testing this target box once again. And depending then on how it comes down and the reaction we have over here, one could consider potential longs. Of course, no financial advice. You have your plan as well as your strategy. In the bullish scenario, we are of course looking for upside, meaning that this is the end of the corrective structure in a WXY, and this move to the upside is a wave 1. Has to be said that the corrective structures in this move to the upside are very, very shallow, this being a 1, 2, 3, 4, 5, with wave 2 retracing to the 0.236. That is very rare for a wave 2, and these sharp moves are actually more reminiscent for potential wave C's to the upside, which tend to be very impulsive without big retracement. So that's something to keep in mind. But in the bullish scenario, we are looking at this structure as a wave 1, and this range is now part of a wave 2. Now there's a big difference with the scenario I just mentioned, and that is that if we get this 3-wave move and then a flat to the downside in a wave 2, this is then the end. You want to see price then moving impulsively, continuing towards the upside, while in the Y scenario, looking for downside, a flat is only the beginning, and if you don't get an impulsive move to the upside, it's way more likely we're going to find more downside. So that is something to keep in mind between the two different scenarios. So basically in both the scenarios, we are expecting price to move to the downside at least once more to take at least this high at 29.4k. Now what you can see on the chart is fib times, which are the vertical lines that I have on the chart, and these fib times are taken from the low of Y to the high of wave 1. And this is comparing the time it took to develop wave 1 with the time it takes to develop wave 2. If I jump to the 4-hour, you can see that we had a wick over here. And for a wave 2, the retracement, again, very, very shallow, the 0.236. But time-wise, this was actually quite nice. It was between the 0.618 fib time and the 1-to-1 fib time. However, price now is taking a while. It's already crossing the 1.618, as you can see, which is not a problem. It's fine, right? I also put the 2 on my chart, which also is not a problem, but it is taking a while. And the longer price is ranging over here, the more probable potential further downside is. So preferably this wave 2 is going to finish somewhere soon. Hitting one of the most common targets are preferred between the 0.5 and the 0.786. Fibonacci taken from the low to the high of 1, which is between 27.9k and 26k. The main problem with the golden pocket and 0.5, however, is that there's not too much confluence around here. We do have the 382, which on the linear chart is in confluence with the support area that we have between 28.8k and 29k. So that is at least nice. Now the 382 is a rare target, so we have very rare, common targets, and then rare over here. So that's something to take into account as well. And the 786 does have nice confluence with the support area we have around 26k to 26.4k. So that's interesting in case price finds its way all the way down there. Now in this then scenario, we expect at least another move towards the downside, either up and down or a little bit up and continuing to the downside. And then for that potential trade setup, as always, we have to wait and see how price is going to move to the downside, observe the reaction, follow your plan, whatever confluences you are looking for a potential long. If we then look at this volume profile, which I think is very interesting, over here, what you see is the value area high. It has been tested once with this wick over here. Now what happens in ranges is if price finds its way back into the volume profile of this range over here, it tends to go to the other side of the range, which is the value area low, sitting at 25.8k, which is closely related to the support areas I have here. However, it's also related to the more bearish scenario where we then go down potentially for this wave Y. As you can see, the key level, the low of W, is in direct confluence with the value area low of this range over here. We do have the point of control, which is an important support resistance flip, as you see over here as well. We went from the value area low to the point of control, got rejected and went down. So if price is going to find its way into this volume profile, the first area of support is the point of control sitting at 28k. So that is very, very important. Price could reject and then continue, or if it fails the point of control, continue to the downside, and then you'd be looking for that value area low. If we zoom in to the two low time frame scenarios I have, this is the, let's say, more bullish scenario because we still expect a move towards the upside over here, where we are looking for an expanding flat. So we then have a wave A, three-wave structure, then we have a WXY in a wave B, and then we'd be looking for an impulsive move to the downside in a wave C. In this scenario, we are then currently working on that wave Y to the upside after this wave X is then a regular flat. A regular flat being a 3-3-5 wave move, impulsive move to the downside yesterday, and now you want to see a move back to the upside. Has to be said that this wick over here already took the double top that we had. So that's why I asked the question, how much is there still to gain after the double top wick? How much liquidity can market makers still get over here for a move towards the downside? Does it make sense? This is the high and then we go down because the stop losses have been triggered. Breakout longs over here got trapped. They're now in losing positions or already stopped out. Doesn't it maybe make more sense to continue to the downside? Questions to be asked. I'll talk about that in the probability section at the end of the video. Because over here, the most common target area for wave Y and B is between 31.9k and 32.4k, which is very interesting as it is very close to the 2022 range highs, where there may be a liquidity grab and a move towards the downside. Now, someone in Discord actually asked a very good question. The 2022 range highs, that is a very long time ago, right? We are talking about highs that were made in May 2022. How many of those people are still going to be in short positions? Like, how much liquidity is still resting over here? And I think that's a very, very good question. Of course, I don't have the exact answer as I don't know how much liquidity there is, but where there's highs, there's always at least some liquidity. But the question is, are the market makers, is the market in general happy with the liquidity it got in this wick for a move to the downside, or does it want more for then a move to the downside? Because in the end, we are looking for this low to be taken. Now, the potential trading setup is a swing failure type of trade, swing failure pattern. So you move to the upside, wick created, closing the candle below the 2022 range highs. That is the entry, stop loss above the high, and then you'd be looking for a downside. Again, that is a potential plan. It is no advice. The second scenario, which is the bearish scenario, we're going to be looking for a move to the downside. So this is a three-wave A, 3 wave B, where it hit the 1-to-1, or actually the area between the 1 and the 105, taken from the high to the low of A with a normal Fibonacci retracement. And this is a common area for a regular flat 3, 3, and then you expect a 5 wave move to the downside. It has to be said that a regular flat is more rare than an expanding flat in general. So this expanding flat, an ABC with the target between the 1.236 and the 1.38 taken from the high to the low of A, is more common in general than a regular flat where the target is between the 105 and the 1. So that's something to keep in mind with the probabilities. Now in this scenario, this is then a wave 1 to the downside, expecting a wave 2 up, and then continuation to the downside in a bigger wave 3. Potentially that happening with the news that we have later. More about that in a second. A very interesting area of resistance, which we've been looking for, is this area over here. This is the area between 30.5k and 30.7k. And this for me is the area that is very important for either the expanding flat wave be up or continuation to the downside for much lower prices. That's why we also have the potential setup over here, depending on how price moves to the upside, because if volume increases rapidly and we get like an arrow to the upside, right, the straight line, it's not a great idea. Always, we don't FOMO here, we don't catch knives and all that stuff. We wait and observe the reaction at the target area over here, and then you look for your entry requirements, which are wrote over here, right? So price enters this area, what does it do? Maybe you want to see bearish divergences. Maybe you want to see a market structure change, whatever it is that makes you feel confident to then enter the trade. Now, this scenario is invalidated if price would continue to the upside and take this high. And the target areas to the downside, well, there is basically 3 areas. The first one is the most common target area for a regular flat between the 1 and the 1.236, taken from the high to the low of A to the high of B, which is between 29.5k and 29k, which is in confluence with the target box. That is for a regular flat. If somehow this becomes a bigger impulse to the downside, we might have to think about a very rare expanding flat, because the 105 is a rare target for an expanded flat. Even though price didn't hit the 105, it got close. So just in case, target for a regular flat between the two 1.618s over here, which is around 28.3k and 28k. But as you can see, I don't really have a nice amount of confluence in this area. Not to forget that the point of control of the volume profile is inside this area, so you could count that as support. And then we have the 2.618, which is a rare target for an expanding flat wave C, sitting at 26.5k. So yeah, very, very interesting, those deeper levels. We're going to wait and see if that is exactly what we're going to get. Now, when we talk about trading channels and also this target area over here that we have, I think it is important to show you. Some people make trading very, very complex, but one of the most simple ways to trade is range trading, because Bitcoin, 70 to 80% of the time, Bitcoin is in a range. And that's why they sometimes say trade the range until it breaks. Now, you have a high, you wait for a pivot low, and when you then go back to the middle, you pull a channel over here from the high to the low, and then one can trade a channel long, short, long, short. This one didn't really reach the low over here, but then here, short, potential long over here. Now in channel trading, usually the middle is then a take profit 1, stop loss break even, potentially take profit 2 at the highs, potentially a runner if it breaks out, yes or no, right? But what is nice is that the target box over here is right in the middle of the channel. So that is some additional confluence for you guys. If we then go to the CVD divergences, we have bullish CVD divergences on the lower time frames. Over here, a higher low in price, lower low on the CVD. That is a bullish divergence, which is very nice indeed. And the target for the bullish divergence is the horizontal line that we have on the chart. So you can see that one over here. And if you want to see the screenshot, because my AGGR is not working at the moment, then over here, I posted this in the updates section in silver, higher low on price, lower low on the blue CVD over here. Bullish divergence where the target is taking that high. So that is this line over here sitting at 30.3k. And a bullish divergence would be nice to also reach this area. So if this bullish divergence plays out, I would be looking first of all at this area over here and see what price is gonna do. Now I mentioned we have news 2:30 p.m. 1 hour and 30 minutes after this video is live. We have high impact news, so make sure you trade safe. This is Central East European time, so you gotta check your own time zone. And then finally, we're going to look at the probabilities. So I have to zoom out a little bit and get the text box on the chart, which is over here. So probabilities. If we look at the medium time frame scenarios, then for me, it's a 60-40 at the moment for the bullish scenario. So if I then have a look at the bullish one, that is this one over here, right? Where we then go to the downside and then look for a move to the upside. It's just all about how price is going to move down and then the bounce that we get. So it's all about that bounce. Is it going to be impulsive or not? One could argue this is 50-50 because we are in both the bullish and the bearish scenario, at least looking for another move down. But yeah, it depends how the bounce is going to the upside. But it's 60-40 for the bullish scenario at the moment for me. And on the low time frame, for me, the, I guess, more preferred scenario is going to be the finished structure, which is this one, this scenario over here, where we are then looking for more downside. However, in this particular scenario, this target box is very important. So we are looking in this scenario, in both of the scenarios, in this one, the bearish one, as well as the more bullish one, we are preferably looking on the low time frame for a little bit more upside and reach this target box. And then depending on the reaction here, we are going to decide as traders if we see the resistance for a move down and the probabilities increase for further downside, or if we see it fill and we expect then more upside. And if this target box is breaking to the upside, we know the resistance, right? I just mentioned if it's going to the downside, we know the support areas. But on the lower time frame, preferably, price is going to find more upside in both of the scenarios. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD in my opinion. And for now, thanks for watching and subscribing, and see you at the next one. Bye bye.